So what is the outlook for the stock market in this new year, all right, in 2021? Okay, so 2020 has been really volatile, due to the pandemic. We've seen the STI and even the Dow Jones tank down by more than 30%, and they have kind of recovered. All right, STI, has rebounded by another 30% from the lows, but ultimately we are still off the highs that we've seen, all right, before the pandemic. All right, so the question is, can there be more weakness ahead this year, or are there some signs of a recovery happening, all right, and we can actually push higher and higher? The reversal can actually happen over the next couple of months as we hit into the end of 2021. Alright, so in this video, we look at the STI, the Straits Times Index, and the Dow Jones as well, where we are currently and what is the outlook going forward. Hey guys, Joey here, top tier advisor in Phillips Securities and chief trainer at Trading Impossible. Right? So yes, I believe that the market will get a bit more bullish. We've seen a bit of signs of strength. We'll dive into the charts for each of them. We look at the STI first, and then we look at the Dow Jones. We look at some of the key levels, some of the key support levels that has been holding over the past few weeks. And it seems like if these levels are holding, it can actually be a bit more bullish, right, this year, right, compared to last year. So like the worst is like kind of over. I mean, since like November, there were talks about a vaccine being rolled out eventually, and that's where the market has rebounded. Dow Jones have kind of hit record highs. For the STI, we have not hit back to the pre-pandemic levels yet, but you can see that there are definitely some signs of strength coming in from the indicators from the charts as well. In terms of some of the developments, we have Joe Biden, right, being inaugurated on the 20th of January, right, and that will be soon, in about 2 weeks' time. So that will be a good news. I would say the market will be a bit more stable, right, compared to when Donald Trump was around, and then we have all the trade war issues even before the pandemic happened. All right, so I think with Joe Biden, in terms of tensions between US and China, that will be a good thing. There'll probably be less tensions going forward, and the market will be a bit more stable, and of course bearing any negative news that comes in from the pandemic. If the vaccines get rolled out slowly and eventually, then that will be a good thing. People are a bit more positive and hopeful, right, in terms of the pandemic being over, right, in terms of the worst being last year, and now we're looking a bit more positive for this year. Okay, so let's go ahead to dive into the charts for STI and Dow Jones to see where we are now and where can we potentially head to going forward in 2021. Okay, so this is the STI Straits Times Index as of the 5th of January, alright, 5th of January 2021, alright, so it's like just 5 days into the new year, alright, and this is where we are currently at about 2,858 for the STI, alright, so let's take a look at where we could potentially hit to and what is the outlook, right? So I've covered STI over the past two videos, over the past few months, and I mentioned that we have kind of rebounded from this really good support level at about 2004 to 2005, and there were really some signs, right, about 1 or 2 months back, there were some signs of strength coming back. Look at this right over here. We had the 20 days moving average, all right, this green line can cross back up above the 100 days moving average, so there's a bullish crossover, and we can actually see a bit of short-term upside, and it did happen, right? And the main thing is we kind of broke this very critical resistance level then at about the 2006 to 2650 and then somewhere around early November, I mentioned, because of talks about a vaccine, and that's where global markets in the Dow Jones as well, US, Hong Kong, even for Singapore, it kind of pushed up by more than 5, 10, 15% since November, right? And after that, somewhere around end of November, we started to hit a bit of obstacle, a bit of profit taking, which is normal, by the way, right? And we have been consolidating since, right? So right now you can see that we are seeing some really good support, all right, at this 2,800 level. So in the video which I did about last month, all right, we were also supported above the 2,800 level, and it seems like right now, it went up a bit to about 2009, a bit of profit taking came back down to about 2008, and kind of like rebounded from the 2008. So far, all right, this 2,800 level, all right, is still holding, all right, and I would say that would be a good support base, all right, for this year, all right, if the bullishness will to continue, right, to the second quarter or maybe even the third quarter of 2021. So this 2,800 is critical, all right, and the thing is we are seeing some signs of strength in terms of a reversal from like a downtrend to an uptrend. And why? Look at this, right? So I mentioned about this really critical support just before the pandemic happened. It was this like the 3,000 to 3,100. We broke down, went all the way down, right, to about 2002. That was the low we've seen in March, and then we rebounded. All right, but the thing is, look at this, right? This 2,800 level was a bit of resistance, so we kind of broke up, and this 2008 would now become the support, which I just mentioned, right? So 2008 is the support. It kind of like coincides with this previous resistance as well. But more importantly, look at the red line and the blue line, right? So you can see right over here when we broke down during the pandemic, right over here we broke that 3,000. Both the red and the blue line, maybe even the green line, they're all pointing down. So they're even looking at weakness even before the pandemic really played out, right? Of course, the market really sold off. But right now, look at this, the red line, this 100 days moving average has like, flattened out over the past, I'd say since like August, September, it was flattening out. And since November, when we started to see the market break that 2,600 level, look at this, right? This red line has been pointing up. So I mentioned it in the previous video as well. Previously, this red line was still sloping up, but it was like still below the blue line, below the 200 days moving average blue line. But look at this right now, right? The red line has kind of crossed back up above the blue line. Look at this right over here. I mean, this red line is above the blue line, right? And it's pointing up. So that's a good sign in terms of a mid to long-term trend, right? In terms of a reversal starting to happen, or it could potentially continue further, right, into 2021. Alright, so look at this, right? The red line is above the blue line. And this blue line, look at this, the blue line was also pointing down, down, down. Right now, you can see that this blue line is also kind of like flattening out. It's not really like down, it's like flattening out. So that's a good thing. Of course, it would be best if it would be pointing up soon, right? But right now you can see that it's flattening out, and eventually I think if we hold above that 2,800 level, maybe even break that 2,009 or 3,000, this blue line will start to point up. So if you have the red and blue line, the 100 days moving average and the 200 days moving average both starting to point up, all right, with the red above the blue, that's a good sign in terms of a reversal continuing in terms of the mid to long term, a trend reversal, right? And that's where the market can get a bit more bullish, and the reversal can start to continue all the way to like 2009. Maybe let's go on to draw some upside targets. I would say right now the immediate resistance is about 2009, right over here, 29 to 2920 here, all right, and that's where maybe some profit taking might happen, all right. And I think we get past that 2009, then of course we'll hit back towards that 3,000 would be a next critical psychological level. That was the level we broke down pre-pandemic in 2020 March. We kind of broke that level, so we might actually attempt to push towards the level, maybe a bit of consolidation below 3,000 before, right, attempts to break above, and that's where the uptrend can start to take shape and push higher. Okay, so this is the STI, alright. I think it's looking quite bullish this year as long as it holds above the 2008. As I mentioned, it can form a very good support base for more bullishness to come, right? And this 2,800 level is key support for now. So guys, if you like this video, be sure to give me an early thumbs up. It will definitely help out the YouTube channel, and thank you so much for doing this, right? So let's get on to the Dow Jones right now. So this is the Dow Jones right over here as well, and you can see that for the Dow Jones, we're pretty much at a record high, even higher than before the pandemic happened, right? So a bit different from Singapore market, the STI. In Singapore, we have got rebounded as well, but we are still, lower, all right, than levels before the pandemic. But for Dow Jones, it's like a record high. So it's really super bullish for the Dow Jones. Let me just do a quick analysis. So you can see that the previous high, just before the pandemic happened in 2020, we're right over here at about the 29,600 level, 29,600. You can see that we kind of sold off really badly all the way to like 19,000, a huge rebound. And look at this, the moving averages, we're all pointing down, but since like somewhere around like September, all right, September, October, they're all starting to point up, all right. And right now you can see that these, red and blue line, they are both pointing up. So a good sign of some bullish market coming back, all right, a bullish market coming back. I think since November, when it talks about a vaccine, it has kind of staged a really good recovery. So yes, this is I would say a good sign. Same thing like the STI, but of course STI is just beginning to happen. But for the Dow Jones in like September, October, there were already some signs of strength in terms of a good reversal happening. Okay, so right now you can see that over the past, I would say 1 month since like December, end of November, we have broken, all right, that 29,600 level, right? So 29,600 was a resistance. It was a high before the pandemic, all right, and we kind of broke that level. And good thing is that we have held above these new support levels. So let me just change this line 29,600 from red to green, all right, because it would now become the support level. Maybe just to give it a bit of allowance, it could be like 29,000 to 29,600 right over here. That would be now the support level. And over the past 1 month, we have been holding above this 29,600 level. All right. So what about the resistance? I would say right now, resistance wise, probably about that 31,000 right away. So over the past, I would say 2 weeks we have been holding, even above that 30,000. It seems like 29,600 to 30,000. Let me just go ahead to draw some upside rebound targets. I would say a bit of consolidation here from that 29,600 to maybe that 31,000. Right, so this is the Dow Jones. I would say a little bit more bullish, right, compared to the STI. In fact, the bullishness has started even earlier. Right, we have seen a really good rebound from like March, April. We have kind of headed back to the the highs that you've seen and pre-pandemic, and now there's a potential for it to push higher. So this year I would say would be a bit more bullish. As I say, people are looking a bit more positive, and the worst of the whole entire pandemic is, I think, more or less over, because people are looking at the vaccines eventually being rolled out, and eventually things will get back to normal. Of course, it will not be so fast, but all this will be slowly priced into the market. All right, when the vaccines are rolled out, people get vaccinated. All right, and then that's good news for the entire world, for the market as well. Okay, so this is Dow Jones. I would say a little bit more bullish this year, and yeah, I think we hold above that 30,000. There'll be a good sign. If that 31,000 were to break up, to clear out, we might even see it push to that 32 to 33,000. But of course, along the way, you might see a bit of profit taking. It might consolidate a bit before pushing higher. Okay, so this is Dow Jones. I would say a good bullish year ahead, right, as long as some of those key support levels are holding right now. So yes, guys, we have covered the STI and the Dow Jones, and also a quick market outlook for the year 2021. So as I say, we are looking a bit more bullish, or I do take note of some of the levels that I mentioned in terms of like the 2,800 level for the STI, and also that 30,000 for the Dow Jones. So as long as some of these key supports are holding, there are some signs of trend indicators turning bullish, is a good sign. All right, so that's a good thing for this year. Hopefully we see the vaccines being rolled out eventually, slowly. All right, and this whole entire pandemic will be slowly over, and things can kind of get back to normal. All right, I wouldn't say it will go back to normal the way it used to just before the pandemic. It probably take a few years for that, but as long as we are heading towards that direction, I think that's a good news. People are a bit more hopeful. Okay, so wishing you a good happy new year 2021. If you have not yet subscribed to this channel, be sure to smash the subscribe button. Of course, give me a like so that you will not miss out on videos like this that I share. Alright, so thank you so much for watching. Joey here.